Hello everyone. Welcome back to Wealth Mama. In today's video, we're going to break down the complete Nifty market action for 19th November 2025, including how the index moved from the opening bell to the closing levels, the factors influencing today's rally, a deep sector-wise breakdown, institutional flow trends, the major gainers and losers with clear reasons behind their moves, and finally, a detailed outlook for tomorrow's market session. So let's dive right into today's analysis. Today, the Nifty 50 staged a firm performance right from the opening. The index opened at 25,918.10, slightly above the previous closing level of 25,910.05. This positive start indicated that the market had already absorbed most of the recent volatility. Soon after, the index gained strength and moved higher to hit an intraday high of 26,074.65. This early push reflects strong buying interest, especially in large-cap stocks, helping the index break above the 26,000 psychological barrier. Even though Nifty dipped briefly to a low of 25,856.20, the market didn't stay weak for long. Buyers stepped in on every dip, showing that there was confidence in the broader trend. By the end of the session, Nifty settled at 26,052.65, which is very close to its intraday high, signaling strong closing sentiment. Why did the market move up today? The main reason is of global factors. Globally, the cues were slightly more supportive today. Asian markets traded mixed, but importantly, US futures were mildly positive as traders scaled back expectations of aggressive rate hikes. Investors are now anticipating more stability from the Federal Reserve, which helped global equities breathe a little easier. Additionally, tech stocks in the US showed signs of recovery, which indirectly boosted sentiment toward Indian IT stocks, and because IT holds substantial weight in Nifty, the entire index benefited. And coming to the domestic front, India continues to show strong economic resilience. Inflation remains within a comfortable band, macro indicators are stable, and corporate profit growth remains encouraging. With festive demand coming through strongly for autos, consumer goods and discretionary segments, the market has enough fundamental support beneath it. Another point worth noting is that Indian markets are currently one of the best performing global markets. This is attracting steady foreign portfolio interest and continued domestic buying, which contributed to today's positive finish. Now let's talk about how different sectors performed. Because today's rally wasn't evenly spread, it was driven by a few key areas. The standout performer was the IT sector. Stocks like Infosys, HCL Tech, TCS and Wipro were among the strongest gainers of the day. Several factors pushed IT up today. Global tech stocks bounced back. Rupee stability supported IT margins. Investors rotated money from cyclicals to stable and growth-heavy IT names. Positive demand commentary from US markets boosted sentiment. Pharma also delivered a solid performance with names like Sun Pharma and Cipla attracting consistent buying. This is partly due to a defensive shift in the market. When global cues are uncertain, investors often hide in safer sectors like pharma. FMCG stocks such as Hindustan Unilever and Nestle were also steady, supported by strong season demand and growing rural distribution. On the other hand, the auto sector saw mild profit booking after strong recent performance. Similarly, metals and energy stocks remained under pressure due to weak global commodity demand and uncertain pricing outlook. Let's now discuss the top Nifty gainers of the day. Infosys, HCL Tech and TCS were among the strongest performers. The reason is straightforward. Global tech sentiment improved, and investors saw good value after the recent consolidation. The US tech outlook also influenced domestic IT stocks positively. Sun Pharma and Cipla gained due to strong defensive buying. Pharma companies are benefiting from steady demand, improving export markets and stable pricing environments. Titan continued to show strength driven by festive sales momentum and strong jewelry demand. M&M also moved higher due to improving rural sentiment, robust tractor sales outlook, and strong SUV demand. On the downside, a few stocks saw controlled declines. Maruti Suzuki witnessed mild selling, mostly due to profit booking after a strong run. Some investors chose to lock in gains after the festive season surge. TMPV, Tata Motors DVR, also fell slightly due to short-term cooling off after recent highs. ITC, NTPC and Coal India remained subdued as investors rotated money towards high-growth sectors like IT. These are typically defensive or slow-moving stocks, so when the market sentiment turns positive, funds shift into more growth-oriented names. FII and DII data. The institutional flow picture supported today's market strength. Foreign institutional investors were net buyers of around 1,694 crore rupees. The inflow was good in today's session. It reflects improving foreign confidence. Domestic institutional investors were aggressive, recording net buying of approximately 1,223.5 crore rupees. This domestic support has been one of the major backbones of the Indian market throughout this year. Together, FII and DII flows helped the market end near the highs of the day. Looking at the pivot levels for tomorrow, Nifty has a strong immediate support at 25,914 and a deeper support around 25,776. As long as the index stays above 25,914, the bullish trend remains intact. On the upside, the crucial resistance is at 26,132. A breakout above this level could push Nifty toward the next resistance at 26,212, which may act as a strong barrier. If the index crosses and sustains above this, we could see a continuation toward a new near-term high. Going into tomorrow's session, the outlook appears positive but slightly cautious. If Nifty sustains above the 26,000 mark, the momentum may extend, especially if global cues remain favorable. The IT sector will continue to play a major role in driving the index, so any negative news from US tech markets overnight could influence early sentiment. Banking will also be crucial. Stronger bank Nifty movement may act as a catalyst for a broader rally. Investors should watch for US futures movement late tonight, global inflation or interest rate related updates, FII flow trend, sector rotation patterns. If Nifty respects the 25,914 support and breaks above 26,132, tomorrow could be another strong day for the bulls. And that wraps up today's extended Nifty 50 market analysis. If you enjoyed this breakdown and found it helpful, make sure you hit the like button and subscribe to Wealth Maama for daily market updates, stock insights, and index level strategy videos. If there's a sector or individual stock you want me to cover in the next video, just leave a comment below. Thank you for watching, and I'll see you in tomorrow's market session update.